What up, guys, and welcome back to another segment. We just started this segment, by the way, so if you like it, give us a thumbs up, where we kind of react to notable figures in their reaction to or their take on assets or pretty much anything that we follow, to be honest. So yeah, let us know if you like that. This one, we got good old Jamie Dimon. As we all know, he's been pretty much shitting on Bitcoin since its inception. He thinks it's dog crap. He thinks there's no value at all. And he warns you to stay away from it. And yeah,
he calls it a pet rock.
Yeah, he calls it a pet rock because it does nothing. And he says this on platforms like CNBC, where you have obviously a huge swath of investors who watch CNBC on a daily basis to get investment advice. And he's been on this very hard over the years. But anyway, got a clip from CNBC. This interview was today. And what's today? The 17th? Today's Wednesday, the 17th. And yeah, they're at Davos and they asked him about Bitcoin. So Vince, unless you got anything to say, let's go ahead and jump right into the clip.
Let's get into it, man.
We pivot to a topic that I know you find sort of laborious at this point.
It's a good word.
Which is Bitcoin.
Yeah.
This ETF was approved just about a week ago now. Yeah. And I think a lot of people are trying to understand what it ultimately means. Yeah. JP Morgan, I imagine if you were a client of JP Morgan, you could call your broker and say, get me some of this ETF. Mm-hmm. What are you telling your brokers to tell them back when they make that call?
Yeah. So this is an important thing. This is the last time I've ever talked about this in CNBC. Okay. So help me God. Blockchain is real. It's a technology. We use it. It's going to move money. It's going to move data. It's efficient. We've been talking about that for 12 years, too, and it's very small. Okay, so I think we've wasted too many words in that. Cryptocurrencies, there are two types. There's a cryptocurrency which might actually do something. Think of a cryptocurrency as an embedded smart contract in it, and then we can use it to buy and sell real estate and move data. That may have value.
The idea of tokenizing.
Tokenizing things that you do something with. And then there's one which does nothing. I call it the pet rock, the Bitcoin or something like that. And so on the Bitcoin, there's, first of all, and I'm not trying to make a joke here. There are use cases. AML, fraud, anti-money laundering, tax avoidance, sex trafficking. Those are real use cases. And you see it being used for hundreds, maybe $50, $100 billion a year for that. That is the end use case. Everything else is people train among themselves. So,
speculate.
Yeah. Now my last statement, the last time I ever talk about Bitcoin is I defend your right to do Bitcoin. I think, it's okay. I don't want to tell you what to do. So my personal advice would be don't get involved. But I don't want to tell any one of you what to do. It's a free country.
Bro, he is funny, bro. All right, so first off, I think he's just blatantly lying, but I also think he's also uneducated on it at the same time. Like, I feel like he understands the value proposition of Bitcoin. I also feel like he understands the threat it poses to JP Morgan. By the way, he's been at the helm for 18 years, and this is his first time selling stock, like over 100 million.
Yeah.
Anyway,
140 million.
Yeah, that's a whole nother conversation. But what makes me say that he's ill-informed is that he just said it's two types of cryptos, a pet rock that does nothing, and then basically like an NFT. That's not true, man. Like, Ethereum is a utility token. You have governance tokens that, like, we did our video on Pendle where you can stake it and get VE Pendle, where you can vote and do different kinds of things. And institutions are looking at these projects. Like, it's not just, this isn't 2017 where it's just ICOs with no value. Like, you have protocols with hundreds of millions of billions of dollars locked in there that's allowing institutional investors to deploy strategies to increase their returns, do new things, but also hedge their risk. So that's the first thing. It's more than just two types of crypto. So that's totally false. I don't know if he's lying or if he just doesn't know. In terms of him lying, I always like to say, watch what they do, not what they say.
On September 12th, Jamie Dimon says Bitcoin is a fraud. He says he'll fire any one of his traders buying Bitcoin. Bitcoin drops 24%. When Jamie Dimon speaks, people listen. So that weekend, we found out that the largest buyer of a Bitcoin fund that's in Europe that buys physical Bitcoin, right? The largest buyer was Morgan Stanley and JP Morgan. And that's not illegal.
He says it's a fraud.
It says he'll fire anyone that buys it. Yes.
And at the same time, his company is buying it.
His company is buying it.
It's just, so unethical.
Right.
The last thing that I want to touch on is this whole pet rock thing. And JT, me and you had conversations on, Bitcoin's value and all that. I made a video. You guys can feel free to watch it on exactly how Bitcoin has value and compare it to gold and fiat currencies. But I wouldn't call it a pet rock. Maybe it's a pet that don't move fast, that grows slow, but it's good at storing your wealth, and you can send money on the most secure network fast without worrying about fees, without worrying about if it's going to get there. It has use cases. It's not Ethereum. It's not a utility token. It's a store of value. And that's why we talk about the whole flippening, which is also another conversation. But another thing that he says, and the guy actually challenged him on this, but Jamie Dimon didn't say anything back. He said, oh, it has use cases. It's used for AML, it's used for money laundering, sex trafficking, like all those things that he said. Guys, we got the FBI a few years. This was back in 2019, and I'm sure there's been more. They caught one of the largest sex trafficking organizations because they thought they were smart in using Bitcoin. And the guy was like, I forget the numbers he said, but he was like, this much money laundering has been with cash. Bitcoin's this much, basically saying cash throughout history has that's where most of the money laundering.
I think he was referring to the percentage of the circulating amount. So like 25% of cash and 35% of Bitcoin.
Yeah. So it's like, guys, you have to realize Bitcoin is on a blockchain. And Jamie Dimon said blockchains have value. One of the values is that it's a structured database where you can see all the actions that are happening. So if you want to money launder or do something illegal, you're not going to want to do it on a public ledger where everyone can see. And since crypto's been around in 2009, you have all these companies that are building different ways to track analytics on the blockchain. So it's hard unless you can like spin up your own node. If you download any wallet or buy a hardware wallet, a ledger, and you like send it from Coinbase or whatever, it's not that hard to track who you are. So Bitcoin is like the worst thing to use if you're trying to launder any money. Cash is where you want to launder money because it can't
actually be better. Yeah.
Yeah. 100%. So he's just pulling shit out that doesn't make sense if you understand this. JT, what you got?
Yeah, man. So you pretty much said some good stuff there, but it's funny. I slightly agree with him. I really do. In that. So if you go high level, separating the DeFi protocols, if you go high level, it really is only two types. You got types that try to emulate Bitcoin, which means inherently they actually have no value because there's only one Bitcoin. And then you have others like Ethereum, in which you can create products and apps. And as he said, you can carry out tokenization essentially and things of that such. Although you can do the same thing on Bitcoin, it just isn't the most efficient. And it probably will get there one day, but I don't count on it. Just because that comes with a swath of developers making the shift to the Bitcoin protocol to enhance it. So I slightly agree with that. You already know how I feel about Bitcoin's value. There really isn't any value outside of it being Bitcoin. I know someone else is going to buy it for me. And I think that in terms of currency debasement, it makes a great hedge like gold. But outside of that, like every other use case that I've ever heard doesn't work. You could pretty much do anything on the Bitcoin protocol, but that doesn't mean it's going to work. So like even with the whole ordinals, like even the amount that was like ordinal season. Think about how little attention ordinals got. I'm just saying. And so you're not going to see, you could do anything, but it doesn't mean it's going to work. Simple as that. And that's kind of what Bitcoin is. Bitcoin has value from everything we said, in the Michael Saylor video, in terms of every project that has been built after Bitcoin has been built with Bitcoin in mind. And the store of value / digital gold aspect alone should be enough to convince someone, okay, this is a great asset. But outside of that, you just be confusing yourself because there are so many other products that accomplish probably what you want to accomplish better than Bitcoin inside of the crypto space. Yeah, that's my take on it.
I think Bitcoin has a lot of use cases that people don't really take into account, such as like most of them I already said, being able to send to and from securely. It's an asset, it's a network, and a protocol. It's the first time we had digital scarcity, so it's scarce. That in and of itself is a use case, and that makes it hold its value good. Because like, who's to say that I can go in my backyard and dig a hole and find a bunch of gold, and the stock to flow ratio will be all messed up on gold. Gold has a 2%.
Nobody about to find no gold. Nobody about to find no gold in their backyard.
It's an analogy, but in some mountain somewhere, You never know.
We hiked a lot of mountains, bro. Have we ever saw some gold?
You never know. It's also portable. If regulations changes or the tax code changes on real estate or stocks, you can't send stocks, you can't send bonds. You can send your Bitcoin anywhere, and you can be subject to whatever regulation you want. It's easy to self-custody. We talked about that more in our ETF video, so you guys feel free to watch that. But basically, banks existed because people didn't want to hold gold because it was risky. But Bitcoin, you can have $10 million in your pocket, no one knows. And it's also expensive to produce with the mining. So that gives it tangible value, because just like you have to exude a lot of resources to mine gold, a gold mine, pay workers, shovels, gloves, dump trucks, all that. Same thing running a Bitcoin mine. You have to buy fans and rigs and hire security and all these things. So yeah, I think Bitcoin's more valuable than some people give it credit for, but that's just me.
Look, that use case that basically in the event that there's a dystopia, we still have our Bitcoin. Okay, guys, remember that we are not in a dystopia. It probably won't happen in our lifetimes. So that's still like not even a theoretical use case, but something that we don't really have to worry about. We don't live in Argentina, guys. We live in America. So that's one of those use cases where it's like, yeah, okay, that's true. But what does that mean for right now? That's the last thing I'll say on that. That's the last thing I would say. But we agree that overall Bitcoin is like 100%. It's a great asset for one. We understand at least that it's a store value. Rules every page on that. It's just little nuances. I guess I like to look at it more right now. And I think a lot of the arguments are more in the future of Bitcoin, which I understand. But right now, and even in the next 20 years, you never know, man. The latest innovation that we're going to see in the next 10 years will probably be a Bitcoin ETF. Think about how crazy that sounds. I think with these ETFs, we've actually limited the growth of Bitcoin, actually, thinking about it.
Kind of, because now you can do like fractional reserve custody. But it's at your own peril, because they know that people aren't just going to come pull out gold because it's heavy. You got to bring a truck if you got a lot. But Bitcoin, you don't have to go anywhere. You just go on your phone and withdraw it. So I don't think it's going to be as shitty as a gold ETF, because they know like, people can pull this out any moment. And we can't, like, back when it was runs on the banks before like digital society, people would, and we talked about this in our Creature from Jekyll Island book review, but banks would ship gold to different banks, and they would put it on pallets, and they would cover the top, and it would be showing gold, but under it was bricks, so it made it look like they had a bunch of gold. They can't do that same thing with Bitcoin, so I'll be interested to see how much more responsible they are. But these bankers are greedy, so they could just say fuck it, because they know it's no consequences. So we'll see.
Yeah, we shall see. We shall see.
What do you make of the other firms, the BlackRocks of the world, that obviously, and Larry Fink changed his view of this, obviously. Yeah. And maybe he changed his view because you think he genuinely believes in Bitcoin, or believed it because he thinks that there's a marketplace for it and he wants to be part of that market. But what do you think of there's about a dozen big financial companies, Fidelity included.
Number one, I don't care. So just please stop talking about this shit. And I don't know what he would say about blockchain versus currencies that do something versus Bitcoin that does nothing. And maybe that's not different than me. But this is what makes a market. People have opinions. This is the last time I'm ever going to state my opinion.
Gold really doesn't do anything either.
Yeah, but gold's limited in supply.
So is Bitcoin.
And it's been used. So you think so, huh?
I do.
I think there's a good chance that when we get to that 20 million Bitcoins,
they go to 42.
No, that Satoshi's going to come on there, laugh hysterically, go quiet, all Bitcoin's going to be erased.
I think, man.
How the hell do you know it's going to stop at 21? I've never met one person who told me they know for a fact. They take that
mathematically, it can't happen, because by the last one will be mined in 2150, and it gets harder and harder every time there's another halving. But Jamie, looking back over,
do what you want, I'll do what I want.
As for gold, you can the 6 characteristics that make gold valuable for 4,000 years. They're all present in Bitcoin. That's all I'm saying. I love you, and I don't want to. And I also don't want to be a.
Joe, you may be right.
Yeah.
Like, I don't own gold either, so okay.
That's what I mean.
Couple of quick final questions.
I like to own things that pay me incomes. It doesn't cost money to carry. Anyway, and it costs money to carry Bitcoin too, by the way.
We've talked a lot about commercial real estate here in Davos. There was a big 60 Minutes piece on Sunday.
But I think there's another risk to Bitcoin. If you can't solve the bad use cases, the government's probably going to have to close it down. So that
the thing about the money laundering, you can here's the number was 20,000, I think, for U.S. dollars for dollars in money laundering, and it was 35 for how much is done with Bitcoin. So at this point, the dominant, I know, but the dominant, know about. Historically, the dominant currency for money laundering has been U.S.
I understand.
Okay.
Few things, man. So you saw Jamie Dimon get really upset and curse on CNBC, and he's talking about, oh, I'm never going to say my opinion. But then he asked him a commercial real estate question, and he wanted to say his opinion again. Bro, I think he's scared that Bitcoin is challenging his banks from stablecoins, because what happens is normally when people buy crypto, Bitcoin, Ethereum, they'll have stablecoins sitting on the sidelines at first, not US dollars. And if it's not US dollars in a bank account versus stable coins, well, guess what? JP Morgan can't take that money and invest it. So I think he's trying to say all these things because he knows investors are watching, and he doesn't want people to get the idea of, oh, I'm better off buying a stable coin, buying Bitcoin versus having your money in a bank. So that's why I always say, watch what they do, not what they say. Last two things. Cost to carry, man. What is he saying exactly? Is that just cost to hold it?
Cost to hold, yeah.
Okay, so Bitcoin doesn't have a cost to carry. Do you know what cost to carry he's referring to? Because last time I checked, I got Bitcoin in my wallet and I ain't paid a damn thing.
No, I don't know what he's talking about there.
I wonder if he's like referring to a custodian that they would have to pay, like as an institution.
Maybe as an institution because you're paying out interest, but that's the only, literally, the cost if you're holding Bitcoin. The only way that you'll be paying is if you're paying for some type of custodial service, or you're paying out interest as some type of entity who offers that as a product.
Yeah, and it's like, also, guys, he's like, yeah, I like to hold things that pay me income. If you guys want to learn how to generate yield on your Bitcoin, we have our Know It All Academy that has a course that teaches you everything you need to know about yield farming, how to stake and provide liquidity with your Bitcoin, your stable coins, your ETH, your altcoins, so you can generate passive income. And we also have live coaching. So if you're interested in that, click the link in the description and book a free strategy session.
Funny, when he said that, I think he's referring to the fact that if he goes and buy real estate, for example, right, that real estate itself is going to pay him. That when he buys it, he's buying the cash flow. If he buys Bitcoin, they have to find some way to generate yield on that Bitcoin. And so I think that's what he means by buying something that pays him.
He could be a market maker, but he would have
to
do
for sure. I'm in agreement with you. I'm just making that distinction because I think that's what he means there. And quickly, before you move on too far, I just want to add on to what you said about he's kind of worried about it hurting the banks. So banks operate on what you would call net interest margin. Simple calculation. Basically, the yield that they generate on their investments minus what they're paying out to depositors or certificates of deposit or whatever it may be, right? Paying out to their customers. And so, that spread is like the net interest spread. And then with a couple more complex calculations, or one more, they come to the net interest margin. And JP Morgan has been hovering around, 3% since like September, at least that's what I remember. 3.5%, right? While that's not super low, it's also not super high. And so I guess some way he would be worried about it cutting into his net interest margin. But still, even that, it's hard for me to see how stable coins would help cut into their net interest margin specifically. And other than that, I literally can't think of a reason as to why Jamie Dimon would consistently shit on Bitcoin. I genuinely can't think of a reason. I can't, unless he's just completely uneducated. But I don't think he is, because you've heard him talk. I mean, he talked about embedded smart contracts. I mean, nobody who's uneducated is going to talk about that and be right in the use case that they just ascribe to it.
And they got that JP coin too.
Right. And they have a whole division dedicated to blockchain. Whether they own Bitcoin or not, we know for a fact they have a whole division dedicated to it. And so I know he's educated. So it's just hard for me to really understand why maybe it's just my arguments emphasized, basically. Maybe.
Yeah. Last thing I wanted to say is that he said, oh, if they don't figure out the regulatory the government's going to shut it down. Bro, we just approved 12 Bitcoin ETFs, bro. The genie's out the bottle. What the fuck are you talking about, Jamie?
And China already tried to ban it. It is unbannable.
You have national game theory at play. If they ban it somewhere else, they know this is the next wave. This is the next trend. And when I say next trend, it's going to offer a lot of jobs. And if America wants to be where those jobs are, which I'm sure they do, eventually they're going to get their regulatory shit together. We're only moving forward. And of all the times that crypto has dropped and there's been bad things that happen, it's never been because of there's been hacks here and there because of, smart contracts and things like that. But for the most part, It's been because institutions and people are over leveraging, so it's caused forced selling, and then this is centralized bad actors. The technology is starting to have that Lindy effect. Like Bitcoin's never been hacked, it's never been turned off. So yeah, I definitely don't see a world where the government's shutting it down. They're only building more and more regulation around it. And like I said, we have an ETF now. So Bitcoin is literally part of the financial system.
Yeah, 100%. And which his clients will probably be asking for.
If they aren't already, which I'm sure they are.
I'm sure they are. Which is probably the reason he's on there talking his book. So he's like, nope.
Lastly, do your own research, man. Like, even if it's someone who you respect, like Jamie Dimon or Warren Buffett or whoever, I lost the most amount of money listening to other people's opinions, or not listening to other people's opinions, because I still do, but taking it at face value and leaving the salt in the cabinet. Like, you want to take everything with a grain of salt, do your own research, stick to your convictions, because had we listened to Jamie Dimon's opinion, Bitcoin's the best performing asset class of the past decade, maybe even ever. Had we listened to him, we would have been poorer. Like, my family wouldn't be in as good of a position if I listened to him. And I feel like he knows that it's a good asset to hold. And that's why his bank or his bank's fund is buying it. So it's like, guys, do your own research, listen to what they say, or listen to what they say with a grain of salt, but watch what they do. Like Warren Buffett's Berkshire Hathaway bought, I forget the name of the bank, New Bank. It's a crypto-friendly bank. And he talks all this shit. And, you know, Warren Buffett is reading the financial statement. He's going to know the ins and fucking outs. So
he read the Bitcoin white paper 10 times, for sure.
I'm pretty sure he did. And he understands it. So it's like, watch what they do, not what they say.
Yeah, man, no, that's actually a great point, bro. And I'll just say this. Okay, if you guys follow crypto, you probably have heard of Gareth Salloway. He's a technical trader, and he makes a lot of calls. Let me put it that way. And so if you've been following Gareth Salloway, he's on the past year, he's had probably 2 to 3 projections that Bitcoin will fall to, $3,000 to $6,000 range. Bro, if you follow that, and let's say you had a short position, yeah, once again, you would be poor if you just took it at face value. He didn't have a short position at that time. He was just saying that it's possible, but he was pretty convicted that it would happen at one point. So yeah, be careful, 100%. I remember I even jokingly said my BTC trading strategy, Gareth Salloway, because at one point he was on a roll. But then it's like, damn, if I followed every move he did, to be honest, like you said, at face value and didn't do my own research, yeah, I would have nothing at all.
That's the thing about being on a roll too. Like if you listen to ICP, he's like a big trader, over 1 million subs on YouTube. He says that once you're trading and you have a few wins, you want to cut back on your leverage because you start to feel like you're hot. It's just like in basketball. When you make 3 threes in a row, you pull it up from half court. And even though you feeling good, it's a higher likelihood that you're going to miss. So the more trades,
unless it's me. So no, go ahead.
The more trades you win, the more you want to cut back on your risk to reward ratio, so that you're not just betting more and more, so that you're not making these profitable trades and then you lose it all on one trade. So when someone's hot, just kind of think to yourself like, oh, Stephen Curry's hot, but eventually he's gonna miss. And if he's missing, it's like, okay, he's good. He's eventually gonna start making. So just because they're hot, don't mean they're gonna stay hot. Just because they're cold, don't mean they're gonna stay cold either.
I like it, man. I like it. Hey, let's make a last call right here. I don't think Jamie Dimon, because of his ego, will ever change his stance on Bitcoin publicly, because he doesn't want to be seen as like a flip-flopper, or there's going to be a ton of media. Oh, Jamie Dimon changed his mind. He does not want that, and he will never let that happen. And so it will be this way. And so we'll probably have more funny stuff said by Jamie Dimon to bring to you guys later on. But yeah, man, unless you got anything else to add.
No, you take it.
Guys, appreciate you as always. Let us know what you think down in the comments. Make sure you tell your friends, leave us a like, and we'll see you on the next one.
Peace out.